In this video, we will be solving the November 19 paper of Symbiosis College, and we will be solving the question on amalgamation of companies. So what we will do is first read the question very carefully. It says Popular Limited was absorbed by Efficient Limited as on 31st March 2018, on which the balance sheet of Popular Limited was as follows. On the liability side, we have authorized capital 60,000 equity shares of rupees 10, issued, subscribed and paid up 60,000 equity shares of rupees 10, that comes to 6 lakhs. Reserves and surplus as general reserve and profit and loss account. Secured loans has 6% debentures, and current liabilities and provisions includes sundry creditors. On the asset side, there is fixed asset that has goodwill, land and building, plant and machinery, and current assets, loans and advances, which include stock in trade, sundry debtors, cash in hand, and cash at bank. The consideration payable by Efficient Limited was agreed as follows. A cash payment of rupees 2.5 per share in Popular Limited. The issue of 90,000 rupees 10 equity shares in Efficient Limited having an agreed value of rupees 15 per share. The issue of such an amount of fully paid 8% debentures of Efficient Limited at 96% as is sufficient to discharge the 6% debentures of Popular Limited at a premium of 20%. While computing the agreed consideration, the directors of Efficient Limited valued land and building at rupees 6 lakh, stock in trade at rupees 1,42,000, and debtors at their face value, subject to an allowance of 5% to cover doubtful debts. The cost of liquidation of Popular Limited was rupees 5,000. Show the necessary ledger accounts in the books of Popular Limited and draft journal entries required in the books of Efficient Limited. Also show details of purchase consideration. Now what we will do is start by calculating the purchase consideration itself. Reading the paragraph below the balance sheet, it is said that consideration payable was in the form of cash payment of rupees 2.5 per share in Popular Limited. Now Popular Limited has 60,000 equity shares. At the rate of rupees 2.5, the cash payment will be 1,50,000. Reading the next point, it says issue of 90,000 equity shares of rupees 10 each, but at rupees 15 per share. So the value comes to 90,000 into rupees 15, that is 13,50,000. And also issue of fully paid 8% debentures, and 8% debentures are being issued at 20% premium. The existing value is 1 lakh. Adding 20% premium, we get 8% debentures as 1,20,000. Now these 1,20,000 worth of debentures are issued at a discount, that is at 96%. So if we want the number of debentures, what we will do is divide 1,20,000 by 96, and we will get the number that is 1,250 debentures of 100, but issued at 96 rupees each. Therefore the total purchase consideration comes to 16,20,000. Now we will prepare ledger accounts in the books of Popular Limited. We need the realization account, the purchasing company, that is Efficient Limited account. We need a bank account, debenture holders account, and finally the equity shareholders account. Now passing entries in the books of Popular Limited. The first step will be to transfer all assets at book values to realization account debit side. So realization account debit to sundry assets, all values, remember, will now be taken at book values, that is the balance sheet values. So starting from the asset side, the first one is goodwill 1 lakh, land and building 3 lakhs, plant and machinery 3,40,000. Then we have stock 1,68,000, debtors 36,000, The next two items, that is cash in hand and cash at bank, will be transferred to the bank account. So going to the bank account debit side, for the bank balance we will write to balance brought down, that is 50,000, and cash balance as to cash account 6,000. Now the entire asset side has been brought into the books of accounts. Since assets have debit balances, if you see, all the balances have come into the debit side of all these accounts. Now taking the liability side, liabilities have a credit balance. So we will pick up all the liabilities and put it somewhere onto the credit side of all these accounts. The first item, that is issued and subscribed capital, will be transferred to the equity shareholders account as by equity share capital amount is 6 lakhs. Both the reserves, that is general reserve and P&L, both belong to the equity shareholders, transferring it to the credit side by general reserve 1,70,000 and by profit and loss account 1,10,000. The next item is 6% debentures. Now we have a debenture holders account, transferring their balance there by 6% debentures, amount is 1 lakh. And finally sundry creditors will go to realization account credit side under by sundry liabilities, creditors value is 20,000. Now the entire balance sheet has been brought into the books of accounts. The next step will be entry for purchase consideration due. Entry will be efficient limited account debit to realization account 16,20,000 was the amount of PC calculated by us. The corresponding credit effect in realization account will be by efficient limited 16,20,000. Now receiving the purchase consideration, we have received it in three forms. The first one being money in the form of cash. So bank account debit side to efficient limited account 1,50,000, and the credit effect in efficient limited we will write by bank account 1,50,000. The next, we have received equity shares which belong to the equity shareholders. Going to the equity shareholders account debit side to equity shares in efficient limited account, value was 13,50,000, and the corresponding effect in efficient limited account as by equity shares in efficient limited 13,50,000. And lastly, we have received debentures which will go to the debenture holders account as to 8% debentures in efficient limited 1,20,000, and the credit effect by 8% debentures in efficient limited 1,20,000. Now we have passed entry for receiving the purchase consideration. Reading further in the problem, it is given that the cost of liquidation of Popular Limited was rupees 5,000. So now we will pass an entry for paying liquidation expense. Entry will be realization account debit side to bank account 5,000, and in bank account credit side we will have by realization account 5,000, and that was for liquidation expenses. Now it is time to close all our books of accounts. So firstly, we will start by closing the debenture holders account. If you see, the debit side is greater, that is 1,20,000. Difference in debenture holders will go to realization account as by realization balancing figure was 20,000, and the corresponding effect in realization account to debenture holders account 20,000. Next, closing realization account, the credit side is greater, that is 16,40,000. Difference in realization account goes to equity shareholders account, and the balance is 6,71,000. Transferring this balance to the equity shareholders account credit side by realization account 6,71,000. Now if you see, efficient limited account, that is the purchasing company, always tallies, and the amount is 16,20,000. The next, bank account, the balance will be transferred to the shareholders, debit side being greater 2,06,000. Difference will go to equity shareholders account, that is 2 lakh 1,000. Going to the debit side of equity shareholders, the balance is 2,01,000 and equity shareholders account tallies at 15,51,000. Now the next part of the question, we will have to prepare journal entries in the books of Efficient Limited. Now mainly in the books of Efficient Limited, that is a purchasing company, we have only 3 journal entries. The first one for purchase consideration payable will be business purchase account debit. Amount of PC was 16,20,000 to liquidator of Popular Limited account 16,20,000 being purchase consideration payable. Now the next entry will be for takeover of assets and liabilities, but this time at agreed values. So reading the paragraph below the balance sheet, we have all the agreed value of assets there. Starting from the first one, that is land and building account debit. Agreed value was 6 lakhs. Nothing is said about plant and machinery, so we will take the book value, that is 3,40,000. The next stock account debit is taken at 1,42,000. Debtors account debit, it is subject to 5% RDD, but here we will write the full amount in the debit, that is 36,000. And the RDD will go to the credit as to RDD account. 5% of 36,000 is 1,800. Creditors also nothing is said, so we will take it at the book value, that is 20,000. And finally to business purchase account, amount of PC was 16,20,000. Now if you see, the debits and the credits in this entry are not matching. The difference will go to goodwill account. So goodwill account debit, the balancing figure, that is 5,23,800 being assets and liabilities taken over. Now finally, payment of purchase consideration. We know that purchase consideration is being paid in 3 forms. So settling the account of the liquidator of Popular Limited account debit, entire amount of PC 16,20,000. Firstly it was cash payment, so to bank account 1,50,000. To equity share capital account, the face value, that is 9 lakhs. There's 90,000 equity shares of rupees 10 each. But they were issued at 15. So to securities premium account, on 90,000 shares, the premium was rupees 5. That comes to 4,50,000. To 8% debentures account, value is 1,25,000. Now this 1,25,000 has come as 1,20,000 worth of debentures being issued at 96%. So actual value is 1,25,000. But while issuing it to Popular Limited, we gave them a discount of 4%. Now 4% of 1,25,000 comes to 5,000, which was discount on issue of debentures. Now discount being a loss will have a debit balance, so in the entry we will also have to debit discount on issue of debentures account debit. Amount is 5,000 rupees. And now the journal entry tallies. This was purchase consideration paid. That is the entire solution for this problem.